Hi, my beautiful people. Welcome back to our channel. This is welcome back to our journey. Woo! Welcome back to Yes, I'm such a silly head. Welcome back to our channel. If you are new to this channel, my name is Woven, and if you're returning, thank you very much for joining us today on this financial wellness journey. Now, you guys, I want to specifically thank you, right, for engaging in the past couple of videos. You said you're loving the financial series, and I'm glad that you are. Even in the mall, we chat a bit about budgeting. I love that. On Twitter, thank you very much for just really engaging, and I'm glad that we can grow together. Now, you guys said you're enjoying the series, but I would like to know what is it that you have so far implemented. Please let us know in the comment section below. What is it that you have learned, number one, and what have you implemented thus far? So I want to hear from you guys, really. Now, in the last video, I also asked if you guys would like me to share on where to save some of your funds, and the answer was yes. So that is what we are going to do today. Now, guys, this is a reminder. What I'm sharing here is not financial advice. The final decision lies with you as to where to put your money, where to invest your money, what to do with your money. Or you can contact a registered financial advisor with Nafisa for financial advice. Now, with that said, I would really like to thank today's sponsor, right? I would like to thank Momentum Investments for partnering with me, really, and really being a partner of advancing financial literacy in Namibia. And really, it does go a long way. And I keep saying we were not taught the basic concepts of finance. So thank you, Momentum, for just partnering with me on advancing financial literacy in Namibia. Now, Momentum Investments is an investment company that provides individuals, businesses, pension funds with investments, and they allow you to invest with confidence, really. And one of the ways in which they do this is through their unitized offering, their unit trust offering. I need to learn to cut back on the investment term so I can just break it down for everybody to understand. I said unitized. It's the same as a unit trust, so pooled funds. That's one of the ways that they provide investments to individuals, businesses, and pension funds. Now, they have various funds, right? For short term, just money that you need quickly or fairly easily available. They have a money market fund. And then they also have funds, unit trust funds for medium to long term. You look at your diversified income funds, you look at your, equity funds, you look at all those type of funds. They have a myriad of unit trust offerings that one can really invest in based on their investment objectives and obviously risk appetite. For more information, guys, on the Momentum Money Market, Momentum Diversified Fund, please contact Momentum or your financial advisor. Okay, now you guys, as we journey this life together via YouTube and Instagram, right? I want to bring you guys along, and just for you guys to get to know me a little bit better, and really to get to know what informs my points of views, what informs my decision making in certain things. What is my departure point, and how really what informs the way I do things. Now, if you know and you've been following me for quite some time, you know that I am Christian. So by the mere fact that I'm Christian, I try my best really to look at what does the word say about certain things that I'm doing in my life. What does the Bible say? I'll give you an example. Twitter, right? There's a bed in front of me. Twitter has a way of working you up when you engage with certain people, and sometimes I really want to clap back. I really want to go really, but then I think I ponder and I stop and I'm like, what does the word say about being quick to anger? Because if you respond in the moment, then you're obviously being angry very quickly. What does the word say about loving your neighbor? If you love your neighbor, would you talk about, or would you say something that would offend them? Things like that. And another example is really vengeance, unforgiveness. I'm calling myself out on the internet, but we will be vulnerable here. So if you know me, right, you know that holding grudges is a personality. What's a personality of mine? Because I no longer hold grudges. Because then I look at what does the word say about unforgiveness, harboring grudges, vengeance is for God, not for me. So it really, really has been beneficial for me. Just I don't always get it right. Don't get me wrong. I'm not saying I'm perfect. I don't always get it right. And even when I get it wrong, I try and after the event really go back and reflect and say, should this happen next time? What does the word say? And how can I, just apply my mind better for a better outcome? So it's the same when it comes to finances, right? I apply the same concept. I say, what does the word of God say about saving, investing, debt, things like that. And it's been beneficial for me. And I want to share with you, for me, I believe that saving is a biblical principle, but not to say that only Christians should save. No, anyone from any background, religion, belief can save, because whether it's a biblical principle or not, it's beneficial for everyone. Now, I want to share a verse with you on saving. And guys, again, I'm not dictating. Saving is good for everyone. What is good for the goose is good for the gander, right? So there's a verse that I want to share with you on saving, and it's Proverbs 21:20. I wrote it down just so that I don't say the wrong things, child. Now I come here, I want to show off that I've memorized it, but let me read it, NIV. So it depends on the Bible version you're reading, right? But it says, in the house of the wise are stores of choice food and oil, but a foolish man devours all he has. Basically, wise people save up, foolish people eat everything. Now, guys, I don't know how many times I need to disclaim. Please tell me, do I need to disclaim every time I talk about saving and financial related matters? We are aware that there are simply people that can't make ends meet, even if they wanted to save, even if they were how disciplined, basically because of their earning or whatever circumstances, they can't. So really, that is the verse, but you would also see it again in the Bible with Joseph, when he served Pharaoh in Egypt. When he was in charge, he basically saved up in preparation for the years of famine ahead. So guys, saving is essentially good for everyone. Really, that's how I approach my life in most instances. I said I don't always get it right. I'm not perfect, but I try, and it's been beneficial for me. I have seen it even with my finances. I'm diligent. Even when I spend, sometimes I go overboard, but even when I spend, I don't feel guilty, because I know there are certain principles that I've applied. That is a mouthful about getting to know me, guys. Let's get into the video. So with that said, right, that is essentially how I approach my life, and often it has saved me from a lot of trouble. Now, as our topic today suggests, where do I save my money? Now you have your budget, right? You have drawn up your budget. You now know this is X amount that I should save, and you now need to place it somewhere. What's very important is you can't just have an amount that to say I'm saving. You need to demarcate it. You need to apportion it to say, this is for my emergency fund, this is for the girls trip coming up, this is junior is for junior's school fees when he turns 18. This is so that you have specific targets, not just a lump sum saying I am saving. In fact, it's even very motivating when you say, okay, my emergency fund, no, now I only have X amount left. My girls trip, now I only have 2 more months. So it's important to demarcate, to divide your savings, lack of a better word, divide your savings and put names to it, like objectives, targets to your savings, not just the whole amount. So if you're saving 4,000, then 1,000 is for my emergency fund. It should specifically name that. That then means you would also have separate accounts. Let me know if I should do a video on that as well, on just the type of accounts you should have or investment vehicles you should have for your savings. So now we're going to look at number one, your emergency fund or short-term investments. This tree is getting on my nerves. Now, if you have faith as little as a mustard seed, you could tell the wind to stop. Marane! Sorry, guys. I am so sorry. So number one, where do I put my emergency fund, Woven? It's a question that I also got asked quite a bit. So you want to consider having this money in a liquid account where you can quickly tap into it should an emergency arise. So a money market fund. In Namibia, there are lots of money market funds. I've also told you about the Momentum Money Market Fund. Now the benefit here is you have easy access, usually 24 to 48 hours, depending on the company's administration. So quicker access to your funds. And then number two, money markets usually aim to have a target return of inflation plus 1 or 2. And if you're saving your money anywhere where the interest rate is not at least equal to inflation, it means you essentially your money is losing value. So when you're saving, wherever you just ask whoever your investment manager is, banker, wherever, to say, what is my interest rate? So those are the two important, or at least benefits of saving your money in a unit trust. A money market fund is the liquidity it gives you, and then also the interest rate. Target return is inflation plus. Now, second one, you can save your money on your bond, your mortgage bond, right? So you have a bond with XY bank and you have a monthly installment. On top of that monthly installment, you can pay an additional amount into your bond that you can essentially have access to at any point in time. From your checking account, you can transfer that money into your bond, but should need arise, you can quickly transfer it back into your checking or your regular account, transactional account. Now, what are the benefits of saving on your bond, guys? This one is very important. All of them are important, but number one, your bond, this flexibility, right? I said quick access to your money if it's an emergency fund or short-term savings. So you can essentially transact between the two. You don't need to contact your bank and nothing. Then number two, you are reducing your capital amount. So the bond, essentially, when you pay money into it, additional money, you're essentially reducing the capital amount. That means you will be reducing your duration of the bond. So if, say for instance, you have 17 years and your bond was 500,000, you could, and you've paid up a little bit more money, you can then reduce that to maybe 15 or to 13 years. So example, if it was 20 years and you pay a bit, then it's reduced to 15 years, or maybe from 15 to 10. Number two, it's once your capital amount reduces, it means when you pay your interest rate on a bond, right, you only pay on the outstanding capital. You don't pay on the whole amount. So if you now have your emergency fund of 100,000, for instance, in your bond, just chilling, it means you reduce your capital amount or whatever. If it was 500, you now reduce it to 400,000. So interest or mortgage rate right now in Namibia is 12%. That means instead of paying 12% on 500,000, you now be paying 12% on 400,000. That means your interest would also significantly reduce. So saving on your bond, for me, when I first got my bond, I knew that one could save on the bond. And the first thing I did was put that into practice. Then I paid money into my bond, right? Additional money. And I couldn't see it. I was like, where's the money that was here? And then I thought maybe it will come a bit later. And I checked a bit, like a week later, it didn't come. Guys, I checked my bank. I checked my bank accounts. It didn't come in. But then I was like, okay, maybe it's done on a monthly basis. Then the next month, I also paid in money again. Guys, the money was not reflecting. Now, I reached out to my banker and I said, I have been paying money into this bond. What is happening? I want to use it, a flexi bond, whatever. I want to use that money, but I can't see it. It keeps disappearing. And it turns out I had to actually apply for it. Like there's an application form that you fill in and then they whatever assess, whatever, and then they give it to you. Then they gave it to me so I could then save into my bond. So just make sure if you can't find it, please contact your bank or your consultant and you can then save in your bond. Especially now, guys, with interest or mortgage rate at 12% and on On Wednesday, South Africa just increased their repo rate, and we know it's coming our way. If South Africa does something, our big brother, it spills over. So I know, and that was 50 basis points. So the more you can save on your mortgage, probably I would think, in for me, the better for me, because then again, reduction of capital amount, reduction of interest, reduction of duration. Now, number 3, you can then keep your emergency or short-term savings in emergency fund in your regular checking account. For me, this is like last resort. Because guys, have you ever seen the interest rate on your bank account? Have you ever seen the interest? Please ask your bank, how much do I earn on the money that is in here? And just do a bit of shopping. Guys, you know, you need to take initiative of your finances. You know, the third place is really your bank account. But like I said, for me, that would be last resort. I don't know what would have happened to all these things, but some people, they don't mind. Often the interest rate on your bank account is below inflation, but you have the benefit of easy access to your funds. I also don't have the discipline to mix all my savings together, so I prefer having everything in separate accounts, or at least separate banks, separate unit trust funds. You know, that's how I prefer to do it. Okay, so I see this video is getting quite long, and I don't want you guys to miss out on like very important information for me to make up for time, right? So I'll probably do another video on the medium to long term, but just as a starting point, your medium to long term, you essentially, unless you don't want to keep that money in a money market, because it's not money that you want to use immediately. But if you don't mind, you can keep it in a money market. But there are other unit trust funds in the market, guys. I know we just hear about money market. There are actually other unit trust funds that are meant to serve medium to long term investment objectives, you know, that look at inflation plus 3, inflation plus 4. Why is this branch behaving like this, please? Anyways, and there are so many in the market, right? For example, momentum diversified fund, you know, there are so many funds in the market that you can actually invest in. Please, another tip. You know, the same way you invest in a doctor, or you pay a doctor to actually properly diagnose you, you should do the same with your finances. Guys, you need to take initiative. This thing of, I tell you, I'm not a financial advisor, and then you still come say, Woven, please advise me, where must I put my money? It's not nice. It means, please just take a bit more, be serious with the finances, you know. And a financial advisor, if they give you proper, adequate financial advice, it actually goes a long way. So it's investing less and getting out more, essentially. That's what I say. Imagine I have a broker even when I'm very clued up on the market, because there are just certain things that I need to bounce, or I need someone to do the shopping for me in the market. I don't have the time. I also value convenience. So try and invest in one, right, that can actually properly sit you down and say, these are your goals, this is your money, this is where we can put it. It goes a long way. I don't give financial advice. I can't do that for you. So your medium to long term, then I said you're then looking at maybe a down payment on your car, your children's school fees, your house. You want to invest in a fund that at least looks at a target return of inflation plus 3, 4, you know, and there are those in the market. But you can also have your funds in a fixed deposit. You know, the good thing about a fixed deposit is, you know, your interest rate upfront, but you can't touch that money for that specific period of time. So if you have the money already, I guess you can put in a fixed deposit. A bank can say, if this will give you 8%, and you wait out your 12 months or your 24 months, and you get your investment plus your return. Now, if you are a bit clued up, or you go to a stockbroker, you can also, especially for long term, 10 to 15 years, you can also invest in shares, stocks. I personally don't. I'm an index fund girl, so S&P 500, those are various options that you can look at. Even your your 30-day savings accounts. You can also look at that. But again, what's very important is you must understand what is the interest rate that you are getting from those investments. I think that's very important. Two things: the risk that you're exposing yourself to. Number two, the interest rate. Because there's no use of you being in a money market fund. Inflation is currently between 5 to 6%, but then the money market fund is giving you 3%. Or in a 30-day savings account, it's giving you 4%. It doesn't make sense. If you just look at the fees plus the interest, it doesn't make sense. Especially now, you wanna really do a bit of shopping, guys, when you're looking for places where to park your money. I've given you an idea of where to park your money. Let me know what else do you guys want me to cover on this topic or on this channel of ours, and hopefully I can bring you that content. Thank you very much, you guys, for sticking around till the very last second. I appreciate your time. I will see you guys in the next video.